Today on the Ever Onward podcast, we have a very special guest, a longtime friend, Andy Scoggin. Andy Scoggin is the founder and CEO, Chief Investment Officer of Scoggin Capital Investment, SCI. He has a storied career, and we're going to get into details with him. Started as an attorney, but then joined Albertsons, was with them for a long time, and then was part of the founding Albertsons LLC that ended up saving Albertsons, keeping it here. Incredible explosive growth, ultimately ending in the acquisition of Safeway and then an IPO in 2020. He's going to tell that story today. It's a phenomenal story. Andy has continued on to be one of the biggest philanthropists and thought leaders here in the Valley. He's just an incredible guy. He's on every board and does so much for our community. I'm really excited to have him on today to have him share his story and talk more about what he's up to. Prior to hearing from Andy, we're going to hear from Mark Cleverly and Holt Haga on an Alquist update.
Good morning. Mark Cleverly here, Chief Leasing Officer with Alquist. We're here for another Alquist update.
Yeah, Holt Haga, VP Leasing, Alquist Development.
We thought it'd be good to spend a few minutes here and talk about triple nets, and just because it comes up a lot during lease negotiations and as tenants kind of look at our buildings, and we've tried to go, our office buildings, historically in the Valley, they've been full service, less janitorial leases in all office buildings, and we've tried to get away from that and go to more of a triple net lease. And with that, it always comes up from a tenant like, well, what's my all-in number, right? Yeah. And so we thought it'd be good to just kind of walk through what that means for someone, because we quote them a rate, and then you got to add something to that, right?
Yeah,
so
exactly.
And you were on the property management side.
Oh yeah,
when we were
I dealt with
we were at Gardner Company, and you know all about
all the
triple
dirty
nets,
details.
all the dirty details. So walk us through some stuff that you would tell a tenant and kind of get them comfortable with the triple nets.
Yeah, and so when we say triple nets, I think it's basically just synonymous with operating expenses. CAMs would be another word to describe it, but we typically refer to it as triple nets. And the reason I think it's come up a lot, in the last 24 months is just because costs have increased. There's been inflationary pressure kind of across the board, but we see it on the operating side of real estate through the cost, to manage a property and operate a property. And so, one of the things, that when we look at, how to control triple nets, it's really a measure of how efficient are you as a landlord in managing your building. And so we as a company, take kind of top to bottom approach and say, what are the key drivers, right? Some of these are controllable, some of them aren't. But you're talking, total, property taxes, janitorial, electricity, building maintenance, admin. I mean, you've got kind of these line item expenses, but the key drivers, always property taxes, a huge expense. Janitorial has become a huge expense. It's like, 20 to 30% of the total, triple net cost, the all-in number. And so there's ways that you can, as a landlord, really influence those numbers. Property taxes are tough. I mean, you can.
So when you brought up controllable versus uncontrollable.
Yeah.
So controllable expenses are ones that we control, like a janitorial.
Yeah,
exactly. Right? That we can go out and get bids on, and hard bid that every year. Uncontrollable, non-controllable expenses.
Yeah.
As called out in our leases, are
electricity,
taxes. Right.
Yep.
We have no control over that.
Yeah.
And it's just a pass through to the tenant, right?
Yeah. Snow removal, utilities, things like that are just direct pass through to us. Exactly. We can't control, but the things that we can control, I mean, we can control property taxes only in the sense that if we feel that the property taxes are high, we will go through the appeals process to reduce that cost. But the controllable operating expenses, for groups that have larger portfolios, we're able to control costs very effectively, and a lot of it is through relationships and economies of scale. So when we're negotiating a janitorial contract, we're not just negotiating for one building, 150,000 square foot building. We've got a full, portfolio that we're negotiating against. So, we've been fortunate in that sense to be able to come out with incredibly competitive, contracts And so the tenants see that on our side. So our triple nets, relative to the market are very, very low. So when we get asked about it and it comes up in the lease negotiations, we share historicals, we share kind of our process for how we, manage our expenses. But relative to the market, we are very, very efficient.
We build great buildings, very efficient buildings. Our HVAC, and it helps too that a lot of our buildings are new.
Yeah.
Right. I mean, and we can kind of control more of the utility side just because it's, our mechanical equipment, our HVAC equipment is new and it's more efficient than a lot of the old buildings. And so we are able to control those a little bit more. And I agree. When companies hear what our triple net expenses are, when brokers hear what our triple net expenses are, they always kind of like, really? You guys are that low? We're like, yeah, we are. And we can show you. I mean, we'll open book everything with you, right? Because we have to with a tenant. We have to show them line by line what those expenses are and what they're getting for those services.
Yeah.
Yeah.
Yeah. So it's interesting. It's like kind of that give take where, if you're talking about a triple net expense, it's typically, well, hey, it's, I as a tenant now have to potentially pay more or have more susceptibility to market conditions with triple nets versus like a full service gross lease, because the difference between a triple net and a gross lease or a full service lease is, base rent plus triple nets equal, your full service gross. So, but when we do show them, we show tenants and our partners what we're actually achieving. It's actually a benefit and a competitive advantage for us. So,
good stuff.
We work hard. It doesn't hurt that we've got your brother Rain Man Ryan Cleverly overseeing our accounting and finance. So
he's the smart one. He's the smart one of the family. I'll take the good looks.
That's right.
Okay, man.
Okay.
Good stuff.
Yeah.
Thanks, Holt.
Andy, thanks for coming on.
It's my pleasure.
This is going to be fun.
Yeah.
They're all fun, but this one's going to be great.
Yeah.
Really appreciate you. We did a little formal bio before this that'll be recorded, so we'll get right into it. But you've done so much here in this town. I don't even know where to start. But can we start at Albertsons?
Yeah.
Do you want to start before that?
You want me to tell you how I got here?
Yeah, tell us how you got here, because I think I don't know how many people I know in my kind of circle who knows the Albertsons LLC story and how that went. But tell us how you got here.
Absolutely. So we'll start really setting the stage that I'm a East Coast transplant. So I grew up in the East Coast.
What
Deep
town?
South. Born in Rhode Island. As a kid, we moved down to New Orleans and then to Florida, and had a short stint in San Diego, but junior high and high school in New Jersey. So really, Jersey was a
Why'd you move so much?
Navy.
Navy.
Yeah.
Dad was in the Navy.
Yeah, Dad was in the Navy. So that was my world, and my dad grew up in Colorado, so I always had this sort of romantic view of the West, and so came out west, went to college, went to law school, ended up in San Francisco with a law firm, and knew I didn't want to do that for a long term. It was a phenomenal education, a great experience, big city, lots of interactions, lots of challenging, complex kind of problems that you're dealing with, but I did not want to be a lawyer in a law firm and a partner and doing that kind of, living that kind of life. Live your life basically in 6-minute increments is what you do. And you're in battle most of the time in the kind of law I was doing. So a friend of mine actually that was in the law firm knew that, and she'd seen an ad in one of the legal magazines for a firm that was looking for people in the Intermountain West. Didn't know where it was, and she shot that over to me, and I said, okay, I'll send something in. Sent it in, didn't hear anything for a few months. In fact, I forgot it that I'd done it when my wife on a Saturday morning gets a phone call in the office, which all associate attorneys are on Saturdays, And somebody says to her, "Hey, I'm calling about a job possibility. I want to talk to Andy." And is he there? No, he's over his office. And he said, "Oh, okay." And then she said, "Can I ask you where you're located?" And he said, "Boise, Idaho." And she said, "Oh." And he said, "Oh, no, you don't like Boise." She quickly, backed that up and said, "Oh, I don't know that much." But, both of us she lived out in Portland, Oregon, and she and her family on trips had gone through the Flying J, and kind of that was what they knew of Boise, and wasn't that much there. And so we're pretty sure this is not a place we'd end up, but I thought, I'll go out, do a little interviewing, see what that's like, and chalk it up to experience, and then we'll keep looking for some place we really want to go. So I got here on an October, gorgeous day. You know what the fall days are in Boise.
Yeah.
Sun is shining, leaves are changing, weather's perfect, and ended up the guy that was going to interview me and wanted to fill this position was smart enough to take me the long way to Albertsons headquarters from the airport, and this is 1992. And so we go through the downtown, we go up in the mesa, it kind of takes me all the way around, and we end up at the office. And on a break during that long, it was a full day, 8-hour day of interviews, he gives me a chance to make a call home, and I said, "Well, you got to see this place. This is amazing." I had no idea. And so ended up took that job with Albertsons, not as a lawyer, really involved in negotiations and doing things that were much more business angle, which is what I wanted to learn, what I wanted to get involved in. Worked in labor relations.
What year was that then?
So this started January 3rd of 1993.
Okay.
Yeah. And so Albertsons said, I think you know a little bit of the story, but started in 1939, amidst the Depression. Incredible story. 1959 goes public at the New York Stock Exchange. 50s, 60s, or 60s, 70s, and 80s has this meteoric rise. The stock splits every other year. The Wall Street Journal in the mid-80s has an article calls it the stock buy of the century. And then by the time we get to the 90s, when I come to the grocery industry as a entity had thought it owned, the American consumer, because it had for decades, and a number of other nascent players start to come into the industry, right? So Walmart,
Yeah.
on the very low end, start showing up. They really weren't doing anything grocery-wise because they didn't need to through the 80s and into the early mid-90s. And then they started to think about how do we drive traffic into our stores, because right now people come when they need something, big. They need tires, or they need, household appliances. They need something like that. Well, you're only going to do that, once, twice a month, maybe less. But if I need food, I'm coming every week. And while I'm there, I might just grab this other item. So Walmart starts thinking about that. And on the other end, you got this little kind of, fruit and nuts player out of Austin, Texas. Whole Foods starts to get a little bit of traction. And we here, I'm just new to the grocery industry, but I hear all the veterans say, well, Walmart will never sell groceries because they don't know how to do that. They're terrible at that. They transport bikes and they transport, sofas and stuff. They don't know how to do refrigerated. They don't know how to display. They don't know how to market. We're the geniuses. We're the only ones that'll ever be able to do this. And nobody wants organic foods, and that's a very, very small segment of kind of weirdos that, are never going to amount to anything. So we're just going to ignore those guys, right? You've seen this story in a lot of industries. So this is the story coming into our industry. Well, that ball starts rolling, or those balls start rolling down the hill faster and faster and faster. And so by the late 90s, it's clear to senior execs at Albertsons and to the board that something's got to be done. And that something, their thought is you got to grow volume. Because now you're getting, especially the Walmarts, who are buying at a better price than anybody else because of how much volume they can drive. And so Albertsons ends up engaging in a in a multi-billion-dollar merger and acquisition. So acquires a company called American Stores,
Yep.
which
I
is
remember that.
a fascinating Idaho story. If we had time just to tell that story, I'd tell it, but it was, started by L.S. Skaggs. And L.S. Skaggs was Sam Skaggs' father. Sam Skaggs was running American Stores through its meteoric rise, but L.S. Was one of the Skaggs brothers out of American Falls, Idaho. His brother started Safeway. L.S. was Joe's partner in starting Albertsons, and then sold out to Joe about 10 years into the Albertsons deal to go start his
So
drug
you
stores.
look at the Idaho roots in grocers.
Safeway.
Yeah.
You look at obviously. So American Stores had owned Jewel Osco in the Midwest. I don't know if you're familiar with them, but Osco was the largest drugstore chain in the Midwest at the time, and still one of the most significant ones. That was started by O.P. Skaggs, another Skaggs brother, by the way.
Wow.
Yeah. So anyway,
And there's still just
Yeah.
because we don't really talk about it, people don't know, but A.J. Belukoff's wife, Susie,
Sam Skaggs'
Sam
daughter.
Skaggs' daughter.
Yes.
So the philanthropy side of that
Yes.
part of the grocer world certainly is still alive. And you look at what Susie and AJ have done here for decades.
Right.
Their fingerprints are on almost all community events and significant philanthropic donations.
Quiet, but
Very
powerful.
quiet.
And that's just one brother, LS,
Yeah.
of these 6 brothers. So love to tell a story sometimes. Started in one little shed next to the railroad siding with a little store that grew into world-changing
Wow.
retailers. And there's several other chains that they're involved in, Save on Drug, Long's Drugs. So, but where that circles back to us is now LS died early. His son Sam took over his little drugstore chain, turned it into American Stores. There never was an American store. It was the overall holding company for Lucky Stores in California and Jewel Osco, Acme stores that were in the tri-state area of New Jersey and Pennsylvania and Delaware. And there were some other chains, and then a couple of big drug chains. And Albertsons said, we're going to acquire them. Sam had, left and sold it, and he was out of that. So Albertsons did that in 1999. Within a year, it was clear that this merger was destined for disaster. It was not coming together. There was not a good mixture on the board. There was not a good mixture at the senior levels.
How long into that? Because I remember
It's
that
about a year.
happening. About a
It
year
started,
into it.
At least internally, we
Yeah.
were clear that
That it wasn't
the
gonna work.
synergies that were promised weren't working. There were a lot of challenges, mostly as I think happens in many, many troubled mergers. It was sort of the cultural challenges between the two companies that had not been resolved or considered before the deal got done. And how are you going to deal with just the way that you charge back on your supply chain? One's a profit center and one's a cost center in the two companies, and we can't agree on that. And so you've got all these camps, divided camps with the company. So the company, eventually Gary Michael, phenomenal leader and CEO, leaves, and he's the one that had been the architect of that merger, and the company board brings in a leader who was not productive, probably one of the most difficult leaders I'd ever dealt with as the new CEO. And over the next few years, the company continues to spend too much and grow too little, to the point where it's clear that something's got to happen, and the company ends up on the auction block, so to speak.
Wow.
Right. So
In a relatively short time frame.
yeah, so this is by 2004,
Yeah.
2005, the company's up for sale. And part of the company, so let me just give you a quick perspective. You got something like 1,000 drugstores. Those pretty easily sold to CVS. So that's gone. The rest are grocery stores. It's close to 1,800 grocery stores. 600 and some odd of these grocery stores are doing terribly. They're losing over $100 million a year. You can kind of package them. This CEO they brought in actually continued to call them the non-core stores, which, for those people probably didn't feel real good. So they weren't, that wasn't helping to grow their, or turn them around. But they're in real trouble. But you've still got 1,100 plus stores that are actually doing really well, but they're weighed down by this, lead balloon around their neck of these 600 some odd stores. So the board at one point realized we can't sell the whole thing, so we're going to have to split up. And so we take these, they package those 1,100, almost 1,200 stores, about 2/3 of the grocery stores, and say, these stores, they're worth something, let's go sell them. And a mostly wholesaler out of Minnesota decides that they can supervalue, that they can make a go of those because they have a small group of retail stores and they'd been pretty successful. So they make a bid and ended up buying those for $12.1 billion, all right? But the board's still got to get rid of the other
600.
640, 650 stores. So what are they going to do with those? Nobody wants them. So I become incredibly fortunate to join together with 7 other former Albertsons partners and a former company called Albertsons LLC, and with some backing from 5 private equity and real estate investors out of the East Coast and Midwest. We are able to buy those for $300 million. So think of the disparity in value
It's
here.
an incredible story, though.
Think of
right?
the disparity in value. $300 million
So I don't know that I've ever heard.
for 650 stores versus $12 billion for just twice that many.
So the thought you
So nobody
had-
wants them. That's
so first of all, you
my
had really
message.
smart people. You can talk about those.
Well, I'll
7.
start with, we all thought we were going to fail. We thought we can do this, and these investors asked us to do this. So we thought, hey, we could do this. We had one ace up our sleeve, which is that the guy who was kind of putting our group together is a guy named Bob Miller. I think you've met Bob.
Yeah, yep.
One of the most legendary retail executives in the last half century, probably.
Bob's a little bit like the Wizard of Oz.
He's phenomenal. He's one of the best people I've ever worked with, and we worked very closely together for 15 years. We still talk.
Very few people have met him or know him. He's behind the scenes, but everyone you talk to says exactly what you just said. Brilliant.
Nobody like him. His story would be one of the best podcasts you could ever do. So born in Mississippi, family moves to in the 50s to Southern California, and he contracts polio.
Yeah.
Right. So he's in an iron lung at age, I think, 9 years old. This guy faces incredible odds. Single mom family, and he has to get a job after work. He becomes a football player with one shortened leg and a bad hip from polio, and becomes captain of the football team. These are the kind of stories you hear about Bob. He gets a job at a grocery store, which eventually is acquired in the 60s by Joe Albertson. But it's he's working, he says his job was to just sort pop bottles back when those were worth, a penny or whatever per bottle for the store. So he had to sort all those and then, go back to school every day and graduate. So he had this idea. He tried to go to college, without a whole lot of money or a whole lot of ability. But the people at the store had a different idea because they really saw something in him. And he eventually, they said, hey, we'll promote you. And he made his way up stayed with Albertsons for 30 years, became an executive VP in operations for the company. And then in 92, ends up going to a struggling Northwest retailer called Fred Meyer. We all know him now, but they were, and they had been acquired by KKR, and so big, takeover firm and some other private equity, and so they were looking for somebody to fix this thing, and he had a good reputation already through his 30 years with Albertsons. Ends up going there, and in a few years rolls that up with other acquisitions all the way up and down the West Coast, Ralph's down in Southern California, Smith's in Utah, et cetera, and creates this Western chain, sells it to Kroger, who we're hearing a lot about recently because they've been trying to, and they won't buy Albertsons, but they're a behemoth out of Cincinnati, and he sells it for the highest, I think, stock value of any grocery chain to this day. Phenomenal deal for his investors and for him. He becomes vice chairman of the board over at Kroger, chief operations officer. He's there for a short time, and Rite Aid, who at that time, just before he did that deal, had been the darling of the grocery industry, of the drug industry, and was, building stores like at a rate of 2 a week across the nation. Their stock was through the roof, and it turned out there was a good reason for that, and that is that they've been cooking the books. And their CEO, I think, goes to jail. Their CFO goes to jail. Their head of HR for stock option validation. Something happens there. I don't recall all the detail, but all of a sudden, a bunch of investors that had put a lot of money into Rite Aid were in trouble, and they needed someone to fix that. And Bob gets another call. Hey, we don't know anybody else that can do this. We've seen, we know you through our investments over there in Fred Meyer, et cetera. And Bob, who didn't need to, went and did that. And within 3 to 6 months, he's got the ship righted again.
Wow.
And he brought some
Wow.
of his team over with him from Rite Aid. Mary Salmons, she was awesome, brought her as president. She ends up replacing him after a couple of years at Rite Aid once they've got that, rolling again. And he's kind of done. He's had a phenomenal career. When he gets a call again from these investors who say, hey, we got this group of broken Albertsons stores, and we need somebody to turn around. You want to put together a little team and do a couple of year stint, and we know you're done. You don't need any more work. And so I get a call in the spring of 2005 or 2006 from a friend who was a former treasurer, I think, at Albertsons. And he says, hey, you want to have dinner with somebody up at Hillcrest Country Club? I said, if you're asking, Rick, I'll go. Don't know who it is. So I show up there, and it's Bob Miller. Now, I'd never met Bob Miller because I started in 93 and he left in 92. But I knew all about him. And in fact, I had a card. I used to keep a card. Now I keep quotes in my phone, but I had this little 305 card in my pocket when I met him. And on it was a quote that I pulled out of a supermarket news magazine from a guy named Bob Miller that had said, when he was asked by the reporter, how do you keep people moving forward in this Rite Aid turnaround when everything is against you? You're a week from bankruptcy. You're all this. He said, we don't get distracted. We don't get discouraged. We know what we need to do, and we go do it every day. That's my quote. And I'm sitting now across the table from this guy that I wrote that down because I thought, that is so simple but makes so much sense. Yeah. And he looks across the table. Says to me, I don't need another job. I've done more than I ever thought I would in my life. But I started my career here. I know these stores. I know these people. I know their families. And he said, I'd like you to come join us, a small group of us. I think we can save tens of thousands of jobs. Huh. I think we could have some fun together doing it, and we might make a little money, but I can't promise that one. Now, on the other side, I got an offer from SuperValue, who's buying all the good stores, be an officer, get stock, have a title, be the blah, blah, blah. In this, what's going to be the second largest chain in the nation at that point in time. So very secure, but not that exciting. And then I got this guy saying, hey, let's go save jobs. Let's go change the world. And I'm a risk-averse guy. And I'm sitting, I said, let me get back to you. And I spend a week calling friends that I trust and people. And then my wife one night comes in. She sees me sitting on the sofa in the dark thinking, what am I going to do? She says, I think it's time you took a little risk in your life. Huh. Great advice. Huh. I called him that morning.
That should go on your quote wall.
I know. Well, she's wise. And so I called him that next morning and said, I'm in. And over the next, so we started on June 2nd of 06.
Before, I don't want to
take your time.
I don't want you to miss this because if you think about the significance for Idaho and the Valley, here's a legacy company started right here, right? This legacy brand that if you think about where it was headed, right? Everything was going away. It was going to be this kind of disastrous ending through a set of circumstances. I remember, obviously didn't know you then, but the community thinking, oh, I will hope this works because this could save a brand. I mean, talk about the community significance, the legacy significance, and the heritage that changed in that one moment with you guys.
Excellent point. And there's 3 things that I think of with that. One is just Joe's legacy.
Yeah.
This guy took a risk in 1939 to build something that became nationwide. And he did it based on some incredibly simple but powerful principles. He built a 10,000 square foot grocery store. At the time, A&P earlier, around that time, Atlantic and Pacific Tea Company, they call it A&P, it was the biggest chain in the nation. They had 10,000 stores, but they were like anywhere from 500 square feet to 2,000 square feet were kind of their footprint. People still were going in the 1930s to the baker to grab their bakery and to the butcher to get their meat, and then they go to the grocery store to get their canned goods and their bleach and their flour, and sort of those central goods. And Joe said, I can change. I'm an innovator. He didn't even know he's an innovator. But he said, I'm going to put everything under one roof and build a 10,000 square foot store. Well, that just wasn't happening. He had an ice cream counter in his store where the kids would come and they had Big Joe ice creams, they called them. And so he's one of those guys that changed an industry and then grew this thing rapidly in the worst economic disaster that the world had ever known, because he created a profit pool for his store directors and department managers. Nobody was doing that. So they were earning if they increased. Just little things we take for granted now. He was putting these things into action, and they were just coming to him as what if and how about, but he was also a guy that got up at 4:30 or 5 all his life because he was a grocery man. And so that's how he saw the world: as you work hard, you take care of your customers, and you got to look at price, you got to look at quality, you got to look at all that stuff, but you got to personalize it, but you also have to be different. Something's got to be different. So anyway, you got Joe's legacy. Now, to your point, we've got the jobs that you have in the headquarters, in the stores around here, but not just that. Wherever you have a large grocery headquarters, you've got Procter & Gamble sets up an office, and they have
all the vendors and
20
associated business,
employees there that now are living in there with their families, and going to the schools and buying products in their city and services and all that stuff. So you've got all of that kind of thing, and then you just have what we care most about is our customers having a great place to be able to go shop and take care of their families. And we have more entrance into the valley now, Trader Joe's, et cetera, than we did then, but there wasn't a lot there. So, it was a labor of love as much as it was a labor of, just having a good career and a job. We all still wanted to,
but it sounds like for you,
do well.
Meeting this kind of legend, sitting across from the table from him, and the excitement of what could be.
And remember the first thing he led with. We could save tens of thousands of jobs, but he led with, not I can make you rich.
Yeah.
So
plus pretty good record of turning stuff around.
Great record of turning stuff around.
Mitigated risk for you, because you're
And
thinking, if I'm going to go into battle, this guy I want to go into battle.
But he's the most honest person I've ever dealt with, at least equal to. So he said to me and to the 2 or 3 other close friends and partners that I had that were coming in together, he sat us down. He said, I want you to know that I don't know if you'll have a job in 2 years or if I will, because this is that bad. We could fail, and you could be back out in the street. I'm not going to lie to you, and he won't. He'll never lie to you. So we're going in, with our eyes wide open, going, we got to get in early and work till late every day. Find the best people we can, put them in the right spots, and then just hope that our ideas and practices work. Well, there's good news here. So first of all, we bought it for $300 million. We started on June 2nd of 2006. We're all sitting in a little rented office space. We didn't have our own offices. Bob's in a cubicle with the rest of us. We're all in little cubicles.
What a story.
Yeah, and and within about a month and a half or 2 months, this local chain out of Northern California, family owned, about 200 and some odd stores, wants to take over our Northern California stores. So let me give you a geography really quick. We bought Florida, Louisiana, Texas, New Mexico, Arizona, Colorado, and Northern California. So the good stuff that we didn't get is like Southern California was doing phenomenal. The Northwest, Oregon, Washington, doing phenomenal. Intermountains, doing great. Midwest and Chicago and all that area doing great. But nobody wants, of every section of the Albertsons company that people who knew the company despised, Northern California was the worst. It had the biggest union problems, pension problems, merchandising problems, customer problems, competition problems. Safeway was the behemoth in Northern California. Nobody wanted to go up against them. And we got this part of the chain which we hate. And they come and say, hey, we want to buy this from you. And when we said, and Bob says, no. Why? Because we just got it, and we know we can make it worth more value. It's like if you went and bought a little house turned into a rental and the windows are broken and the picket fence is laying on the ground, someone comes and says, hey, I'll buy that from you. Well, you know they're trying to get a deal.
Yeah.
So, give us 6 months to paint it and put new windows in and carpet or whatever. He won't. The guy, it's a privately owned family company. It's the son of the founder, and he's used to get whatever he wants, and he keeps coming back. And so finally, we enter into discussions with him. And in March, we end up selling, after a lot of back and forth, the Northern California, less than 200 stores of our 650, for $595 million. So we bought the chain for
300.
and we sell the worst part of it 8 months later for double our money.
Wow.
So now our investors go, oh, maybe these guys aren't that dumb. Maybe they might know what they're doing. Well, that was a great start. We were able to give out a dividend, roll money back in. But then most importantly is that over the next 7 years, really in the first year we turned sales around and we got positive. So we had positive sales within a year. Within the next 7 years, from 2006 to 2013, we returned over $2 billion to our investors. Wow. And we trimmed it down to the really 192 best stores, $4 billion in sales, got positive EBITDA. We've paid off pretty much all our debt. We're debt-free. And we think, hey, we could just run this thing, a couple days a week. We'll come in. I don't golf, but if I golf, we go golf, whatever you do, because it was just a machine. Yeah. It was just working really well. Then at that same time, SuperValue, who bought the really good stuff, had 7 years of consecutive negative sales every quarter. Yeah. 28 quarters of consecutive negative sales. And so they were heading off a cliff. And some of their stock investors, particularly a very activist stock investor that had bought a bunch of their stock, came to us and said, hey, into our board, hey, would you look at SuperValue and see what you could do there?
What an incredible story.
And we went on due diligence, and they were in such bad shape, we couldn't even finance to buy. They wanted to sell the whole company to us. Couldn't do it. What we could finally figure out we could do is buy back the Albertsons part. They'd have to keep their original company, but we could buy back the Albertsons. And we engineered it, and we did this in March of 2013 for $3.3 billion.
Wow.
Which they bought for $12.1 billion, right? So we got a significant discount, which we like in the grocery industry. So we bought that back, and here's the beautiful story is within one full quarter, our division presidents and store directors that we, kind of dropped in the best we had, parachuted in behind enemy lines. We were positive on sales, which they hadn't been 7 years, in one quarter.
Wow.
And then we spent quarter after quarter going 8 to 10% sales increases every quarter. And our investors say to us, hey, come back to New York, which is where we had most of our meetings. We want to talk to you about another deal. We're hearing through the grapevine that Safeway, who's been, phenomenal history, great company, but had flatlined for the last few years and had some challenges, just sold off their Canadian division, and Chicago they're having to sell because they bought this company called Dominic's and kind of drove it into the ground. And so they're in trouble. And we say to them, look, we just did SuperValue. We're trying to integrate, double our size, and you guys want us to go look at another company. And they said, we'll put up the money, which is basically, by the way, the money we gave back to them. They're not putting any new money in. So far, they're playing with house money. And so we end up doing the Safeway deal. Wow. Long story short, they were public. We bought 100% of their stock off the public market, took them private, and then merged them into our divisions, but kept their names, which is a mistake Albertsons had made, is trying to put the Albertsons name on acquisitions too quickly. So we kept Safeway or Vons or whatever the company title might be in those areas. And interestingly, we found out a while later that if a customer went through an Albertsons store in a particular town in Washington and goes, I was not happy with that checker, I'm going across the street and I'm going to go to Safeway, I'll show them. We go, darn. As you know,
Can you? So one of the it's an incredible story. I've only heard parts and pieces of it, but it sounds like. What are some of the principles you can share on the management side?
so
Like,
I
there's
wrote
got-
an
there's-
entire training curriculum for our up and coming executives that we would bring in, and I call Albertsons LLC secrets, which were not secrets at all. It's in an hour, so we don't have time. But some of the, it's very simple stuff. The first thing I wrote was we were very good at decomplicating, and I use that word instead of simplifying because, like any business, we're so complex.
Yeah.
So the complexity is going to be there. I consider complications to be something you layer on top of complexity to make it hard, or decomplicate something so that you can't make it simple. We're moving billions of little pieces of product into warehouses, out of warehouses, onto shelves, through check stands, and out into customers' cars every week,
That's not easy.
and tracking every penny of those billions of items every week. So it's very
You hear different things,
complex.
because
But it doesn't have to be complicated, which means all the red tape, all the stuff
And what you
that
hear is the
slow
margin
people
is
down.
pretty tight,
The
right?
margin's very tight.
Right?
Yes.
Because there's so many things that have to happen.
yeah,
so
you're
you can
2 or
see how.
3% margin in many things.
And then if you've got bad management or something along the way, it's not hard to see how you could get upside down pretty easily.
Yeah, so I'll give an example of Supervise. By the way, great people at Supervise, so this is not to disparage them, but we would be trying to do that deal with them, and every deal had to be made by a committee, and some of them were, we used to say it took us, 1 hour and 3 people decide what it took them 1 week and 30 people to consider. And those are, the difference is how do you decomplicate a complex structure? So take away from the things that you don't have to be done, but, some, management consultant came in and told SuperValue or IBM or somebody else they had to do. You really think about, what does the customer care about? Do they care about all this stuff and all those committees and all that stuff, or do they just care about this product? So decomplicating was one that we lived with forever. And so that meant fewer people, quicker decisions, close to the customer, which is my next one, which is decentralized, which is that most of the companies that we dealt with were centralizing more and more over the 80s, 90s, and 2000s. And some companies it works perfectly for, like Walmart, because they want no
Variation.
variation. Exactly.
Yeah.
Everything needs to feel the same everywhere you go. But for us, what happened was SuperValue again was centralizing all of their a lot of their purchasing and merchandising, and so we went to a store in Southern California, a great store on, I think it was UC Irvine campus. Store director, his basically he's got students and professors and people that are, a lot of them are living on campus, living in these apartments, et cetera. And they shipped him a big order of 100 dog beds because they got a really good buy on them centrally, and everybody had to sell 100 dog beds. And he's going, what do I do with them? These are kids in dorms. Because he wasn't making the decision, right? So we push our decisions out into the division, and they push them out to the stores, so that you're going to sell different salsa in Austin, Texas, than you're going to sell in Seattle, Washington. Well, not if you're centralized, but yes, if you decentralize. So decomplicate, decentralize. Treat your vendors like they are your partner instead of like they're the enemy. This is so
great stuff.
consistent and really challenging in industries to see vendors treated properly. Put in very simple bonus plans. So we would see in our industry bonus plans with sometimes 6 or 8 or 12 different things you got to get in the quarter or the year, and we did them quarterly.
Too hard to have line of sight to how.
We did them quarterly because we want people to be in watertight compartments of a quarter, because we were trying to turn something around. You couldn't wait a year.
Yeah.
So we got rid of annual bonuses, got to quarterly. We had 2 levers. That's it. It's a profit and a sales. And the profit was the lever, and the sales was just a qualifier. You got to get above this number, but then your profit's what mattered.
Awesome.
Simplify.
What about
your
customer
profit
service?
structures. So, the thing is that if you're doing all this stuff right, then all you're pushing out to the
if you got profit,
customer, and you're paying them to sell to customers, then you get out of the way.
Yeah.
Right?
Because then they want, Hey, there's a lot of stuff to get to.
There's a lot of stuff, but we got to 2015, we did Safeway. That was a huge effort to bring a great group of people in. We got some great talent from Safeway, but we, and in the end, in 2020, we're able to IPO the whole thing in June of 2020. And I and my partners over the kind of the year before that, for a number of reasons, kind of got a good group of people in place. I still own a lot of equity in that company, but good people in place so we could go on to do our next chapter. We just had Bob's 80th birthday in Palm Springs this year. All of us went to it. And we still, to this day, get together quarterly if possible we call it the Albertsons LLC Old Guys Lunch. Just had one 2 weeks ago with my buddies. So not only did I have an incredible opportunity to work together, we were much more successful financially than anyone of us guessed that we might be, but also we made these lifelong friends. We admire each other. We respect each other. And those, to me, are treasures that are far beyond, whether you have an X amount in your bank account, is the people you meet along the way and get to work with.
I want to take you back now because I've known you for a while. One of the very first, I'd got to tell a personal experience. We had a little get together at my house, and you came, and you walked in, and we had a guitar sitting in the front room, and you're like, "Who plays guitar?" And I didn't know you very well at this time, and I said, "Oh, my son plays jazz guitar." And you're like, "Oh, is he here?" I mean, this is like right when you walk in the house. We're like in the middle of trying to have this party, and I'm like, "Yeah, he's upstairs." And I went and grabbed my son, and you made a definite impression on him. It's come up dozens of times since then, but you sat with him and you had him play for you. And at the time you were becoming a guitarist, and that's continued to be one of your passions. But the interpersonal connection in
He's talented.
But in a really short time, Andy, you made a big impression on him. And then I've been around you in a lot of different things. So I'm trying to get to a question here. Tell me about what makes you tick, because you're a pretty unique guy. I mean, you are a leader's leader. You are people follow people. You hear of all the success you have now, and then we're going to get into what you're doing since 2020. But what makes you tick? Talk about growing up. Talk about your foundational principles. What makes you who you are, because it's pretty incredible. And that's what I want to dig into with you.
Thank you. And do any of us know what makes us tick? Because we're we're not on the inside looking out. But I will start with this, and I know I share it with you, but also with a lot of I've listened to the people that you've had on here, phenomenal people. I go out on my walks and my runs or my drives, and I'm listening to your podcasts, and I think they share with this, which is that I start with that I believe that we have, what matters to us is really bigger than just the day-to-day stuff. I think that we, have this eternal potential that goes beyond, I'm going to die someday, you're going to die someday, but we're building for even beyond that we, are, endowed with these kind of abilities and potential to go do bigger and better and more positive and more things of greater value than we realize we can for the people around us. And I'm always trying to figure out, how do I find people like a Tommy Elquist? How do I find people that have tapped into some of that and just learn from them about what is it that can continue to improve and refine and have fun while you're doing it, right? Life should be an adventure. Life should be full of challenges that drive happiness and joy for us and the people around us. But it shouldn't just be, the struggle, or it shouldn't just be, a checklist, or it shouldn't just be a scorecard of who am I beating and or did I, do I have the most toys or whatever it is. It's really, what am I building in my life and who I'm trying to become. And I look at it in a kind of for a long time, a 5 segment life. I spent years every January writing out kind of what I want to do for the next year, and it goes all the way back to my teenage years of looking at these sections that we all think about, which are intellectual or mental. What am I going to do and to learn things there. Physical, what am I doing for my physical body and health? What am I doing socially to, improve the relationships I have with people around me, both the ones that, I love and they're great, and also the ones that are challenging and improving. So, the social piece of it, the spiritual piece, the sort of what's bigger than just me, and then finally, of course, the temporal or financial. How do I, provide for myself and maybe be able to give back to the broader community from those 5 things. And for a long time, I had them as 5 segments. I had this breakthrough about 7 or 8 years ago where I realized that I had it kind of wrong, where I now drew a circle with 4 quadrants in it, which is still the physical, the mental, the social, and the financial. And I drew a circle around that whole thing, which is what I'd call kind of the spiritual or the higher, value, and then said, that should touch each of these. So why am I doing this physical? Am I doing it just to look better on the beach, or am I doing it because I want this body to be able to continue to work and do things for others? Why am I doing this financial? Is it because I want to have the biggest bank account and the coolest car, or because I want that to touch that outer ring? So how is my social touching that outer ring? So if the outer ring is touching those 4 qualities, then that drives me to make different decisions. And I think for me, much more healthy, much more exciting and positive decisions about why I'm learning, why I'm growing, why I'm giving, why I'm earning, why I'm doing all those things. So I like to make really big goals. I grew up, like a lot of people that you and I meet that have done well in a pretty lower income world. But in some ways that made me really, want to prove myself. Yeah. So while all the other kids were, I was a cross-country runner, and where I was wearing Kmart shoes, they were wearing Nike, which was a cool new brand. And so I'm going, okay, I'll show you. Yeah. And I started that way, and I've probably not quit.
I think that's super powerful. And one of the things that comes up, it's always interesting to me because I've never done kind of a deep dive on some of this stuff with you. And then when I sit here listening to you, I think it's important for people listening that may be younger than us, that when you talk to an Andy Scoggin and you find out what drives you and how you organize your life, you're pretty methodical about paying attention. Like what you just outlined, the way you plan your year, the way you look at your life, the way you try to keep, I think balance is a hard word, because I'm sure there's times when you were down in San Francisco working in a law firm and you're working on Saturdays, or sometimes you're with Albertsons LLC, where you may not have the time balance, but you've got the same priority balance wrapped around your goals at all times. But the bigger point is we never stop learning. Yep. We never stop growing. We never stop creating for ourselves, our family, and our legacy at this point, Andy, what you're all about. And that growth is exciting. And when you get with people like you, I think every time I'm with you, we had lunch not too long ago, but I left that lunch thinking, gosh, I love being around people that make you think and make you want to be better, right? And that's people follow people, and they think, I think there's a lot of value in understanding that when you're younger, that there's not a point of arriving. It's always a growth thing. You're never stop, and hopefully that drive,
I hope not.
and hopefully it just gets bigger, and maybe with some wisdom comes later on how you can reflect a little bit. I think you said a couple other things today, like business, creating jobs. I love the story about Bob telling you it's about the 10,000 jobs. That's what it's about. It's also about doing business with people that you want to do business with, people you want to grow with, people that you want to interact with. I think of the relationships you must have as you get together now with the Albertsons old guys. I mean, what a life. What a life. Did you ever think?
No. I just work towards. But I will say that much of what you just described, I didn't invent. And you know that. You didn't invent what the best parts of us. We learned it from people that we knew were wise, that sometimes aren't the flashiest, but they're just the people that get stuff done and think in this much, higher level, I think, and you just want to learn from them and be around them and try to absorb some of that. So I'm the product of being able to be around, or in books or in person or in videos or in whatever setting, is people that truly drive you to be, if you listen and if you put it to work, better than you were yesterday, and better than, and you're going to be better tomorrow. I will tell you, the other thing I think is important is to have big goals, challenges, adventures ahead of you. And I know that's you. With you and projects I look at and I go, I don't even know how he's can conceptualize some of the things that you not only conceptualize, you go and make happen. That I think these are, dreams that, most people don't even make into reality. But every year, you're setting something out there that, hey, this is going to be really hard, and so I got to prepare myself physically or mentally or, whatever it might be to go meet that next big thing. And I've watched people that I really admire that are always setting their big annual thing, their big 10-year thing, and going and getting it done.
Yeah, I think I talk to a lot of people that don't maybe write stuff down or aren't so goal oriented, and they do just fine too. But I can't imagine living my life that way, because I think it's just always the vision of what's next and how we're going to get there. I also think one of the things that have come up multiple times today is the importance of the people that are with you. I mean, I think as you sit here, and I can hear it in your voice as you talk through these different steps, who was by you and who came in, and the people, ultimately, that's the richness, is how and who we do all this with. The families that become part of our families, the friendships that become more than friendships, those bonds that last forever. And that's the beautiful thing about what we get to do. I mean, I think that ultimately, if I think of America and the opportunity I've had, I'm giving a talk Thursday night for Operation Military Blessings. And I always get a little squeamish when I give, I don't know if it's guilt. I almost went to the Air Force Academy out of high school, and I didn't. And we had a big legacy in our family of people that had served in the military. So when I'm ever asked to go speak at Mission 43 or go do something for the military, I always just feel inadequate. It's just part of what I do. So in preparation this week, I thought I'm going to do something different. And I've spent the last 5 days talking to, I had an uncle, his name was Uncle Darrell Farmer, and he was a lieutenant colonel in the Air Force, and has this heroic, he was like the guy for me growing up that was larger than life. I mean, Uncle Darrell was an action figure. And I've been talking to his kids this week and getting pictures sent in that I'm going to use in my talk. But my point is, if you think about all of us and where we're born and how we're, like, the opportunities we have, and then the opportunities that are afforded us in this life to do so many amazing things, the joy is in the journey.
Yeah.
And the joy is with the people you're doing it with.
Yeah.
Whether it's him in the military, and I'm hearing these heroic, amazing stories of how these became friends for lifelong friends. The other thing I just learned about him this week, and I knew this from a kid, he lived in Pueblo, Colorado. And I remember going and visiting him. And you got to remember, when I was growing up, this guy was was G.I. Joe to me. This was the guy that would fly these missions into Vietnam. And I had pictures of him. And I remember when I was a kid, he gave me a model of an F-4E Phantom II. And I built that model. And he was like bigger than life. And then I went to Pueblo, Colorado to visit them with our family. And he was working in a Kmart. And I remember thinking, I was probably 12 or 13 at the time, he's working in a Kmart? And he took me to his store that day, and I watched him. He had I'll never forget, he had a red vest on, and he walked around the store and introduced me to all the people there. And when I was preparing for this talk this week, I looked, and he ended up working for 22 years at that Kmart after he retired from his storied military career. And when I talked to his kids this week, that part of his life was as important, if not more important, than this storied military career, working at the Kmart in Pueblo, Colorado. So I hear those things, and I'm like, man, it's just inspires you to try to want to do more.
And I will bet he brought to that job what he brought to his military career.
I'll bet he did too. I know he did. I actually looked up last night the comments in his obituary, and almost all of them were from people who he had interacted with at that Kmart. I thought, man, there's some good people in this life that do some wonderful things.
Well, and you talk about relationships, and we're now seeing stories in the Wall Street Journal and from the Surgeon General and others about this epidemic of loneliness. And so one of the great wealths we have that we need to, be very cognizant of and appreciative of and grateful for is relationships. The people that we get to spend time with, the people like you that I, get to know, and whenever we get together, it's like, oh, we're talking about stuff that matters together. And so those aren't going to happen by accident. So you have to cultivate people and take care of them and watch out for them and recognize the things that they do that are good, and be their cheerleaders and show them love, because love is kind of that thing that we don't talk about in business, because we're about P&Ls and balance sheets, but if you don't love the people you're working with, go find another job.
Yeah. Hey, this went by so fast, but I did want to mention State Board, like you do.
State Board of Education.
State Board of Education. You did so much. You're on almost every, I think, of the philanthropic things you're doing, Andy, and it's everywhere. I think you're one of the thought leaders in this place. Everything that matters, I hear of work you're doing, and I just wanted to tell you thank you for that.
Can I bring that back to what I started with?
Yeah.
Which is, I didn't want to come to Boise because I didn't think it was going to be. We got here and found out it was the most perfect place for us and our family. And I believed, and it just really hit me hard about 10 years in, that if you feel fortunate to be in a place, wherever that place is, for us it's the Treasure Valley and the broader state of Idaho, and this is where they will bury me because I will never leave, is if you feel that way and you're not giving back, then what you value, if you're going to lose. And so every person who feels that way needs to be not just waiting for the next good thing to happen in your town, but being part of helping to make that. And I want to do my little piece, like you're doing your bigger piece, to make where we are, we're living in this little bubble of great stuff. Every day I got to do a little bit to help give back to that so that my grandkids experience it as well. So I came to a place I didn't want to necessarily be, ended up finding out it's the perfect place, and I want it to be that way for the next generation and the generation after that. And you only get that if you're willing to put in the work.
I love that. Last thing, so you founded SCI, so that's your
Scoggin Capital Investment.
Yeah. And you're having fun. One of the other things I love about it is this idea. I mean, there you go. Like you're Brundage Mountain, right? So you're investing in lots of things.
Yep.
You're investing in businesses, you're investing in real estate, and you're taking probably lessons and wisdom learned from a long time. You're choosing partners that you want to do things with, and you're having more fun now than you ever have.
Yes. Yes, I am. I'm having a blast, and I'm I feel very blessed with that.
Yeah. Hey, this again went by way too fast. We're gonna have to do it again. This was fantastic. Thank you for all you do.
Thanks for putting these on. These going out into the world.
Yeah.
This one maybe no one will listen to, but they're listening to a lot of the rest.
Well,
they're phenomenal.
Well,
and they
I
are
don't,
the kind of thing. There's a lot of less than uplifting media going out in the world, and then there's this contingent like you're putting together of stuff that actually brings positivity into the world.
I hope so.
Thank you.
I hope everyone enjoys. I just love this because I learn, and again, as you get old, you're like, what are the things I want to do with my time? This is certainly one of them. So, I love you, man. Thank you for your example. Thank you for what you do for the state, and will always do. You and your wife and your family. Thank you so much, and keep it up.
I'm honored to be here.
Thanks, everybody.